It is the 26th of June, 2012. It is a Tuesday. A few years ago, it was not uncommon for me to hear a Canadian in my own country of Canada state that the Canadian banks are much better than the United States ones, and therefore we should not be as worried, I guess. The same similar sort of ideology I've noticed in the United States as well regarding that of Europe. Europe, the nation having all of the problems, where here in the United States, we'll say the Western Hemisphere, things are just peachy fine. And the second paragraph explains this very fine. This is from an article from Sunday on CNBC, the link on the top right. The economic crises in global history that have stemmed from excessive debt and financial leverage have proved to be the deepest. And while the United States has managed to maintain slow, if steady economic growth, many European countries are dealing with the threat of deep recessions, very high unemployment, and intractable deficits that are only worsening because of the lack of growth. Now, what's a little concerning or troubling, to say the least, is how they don't mention how debt and deficits to be worsening, I guess you say, is automatic to exist, automatic to be guaranteed based on debt, 100% to be guaranteed. I guess it's just something everybody knows that you just don't need to really add towards, and it's really unfortunate that many people support a evil debt-based system that again guarantees debt within the legal tenders that only central banks can mine. Thus, they have a monopolization on such a deal that they would actually find it to be okay. But back to the point, and while the United States has managed to maintain slow and steady economic growth, many European countries are dealing with the threat of deep recessions. And as far as the excessive debt is concerned, you can take a look at the national debt clock. It's actually quite high. A couple comments that I received. One on the weekend video, which is from Free Skate. So if we are wise and know ourselves, and it happens to be that we know that we suck at picking highs and lows for silver, example, our odds are much lower than 50% of buying at the right time, then are you saying we should just use dollar cost averaging, buy the same dollar amount of silver out of the savings from our paychecks each month? Well, that's one example. There are a few different ones as well. And of course, when I look at, say you're not good at something like, say, picking this game, what I think is important, at least in game theory, as far as sports competition is concerned, this is pretty much life, is to know your strengths, know your weaknesses, maximize your strengths, minimize your weaknesses, and do the opposite with your opponents. Maximize their weaknesses while minimizing their strengths. So therefore, if something that, as far as using chart analysis to pick highs and lows is something of a weakness, then why try to maximize it? You try to minimize it. So that would be one way of doing such a thing. Okay, second comment has got to do with yesterday's video regarding a triangle. And I was talking about the ascending triangle on the silver chart over the last year and a half. There is no triangle. Elliott Wave defines triangles very precisely. That is not a triangle. And this is really not an Elliott Wave kind of channel. It's more of a Fibonacci retracement. However, I think that it shouldn't be hard for people in Elliott Wave to learn the theory of Fibonacci, because like Elliott Wave, it's got a lot to do with highs and lows, and yeah, that's why it's really important. Now, the thing about the definition being very precise, because it was precise, I thought I'd have no problem doing a Google search for Elliott Wave triangle definition, and because it's so precise, it'll come up very easily. Well, it didn't come up too well for me to find it, so I don't even know what the definition is, nor was it given to me. Let's go on to the weekly chart in silver. Now, on the top of the screen, you're going to see right triangle. You might be able to see it, you might not. This is a tool on Paint I can use to draw a right triangle. Well, that looks like a triangle to me. And from what I remember a triangle from, you have a 90-degree angle. So that's this, There's a straight line. Then you have another straight line. And then a curved line to finish it. That, to me, from school, is what I remembered as a triangle. But the key point about this chart is this. You have this downtrend line, and you have a straight line. As long as you're within this trading range, you are in the triangle. For the resistance line is this here, still well above it, or excuse me, well away from getting above it. You have the support line, barely above it, but still holding above it. And the duration of time before this line meets up with this line, well, there's a decent amount of time, to say the least. Let's go on now to the short-term silver analysis, and let's talk about yesterday. I was talking about on the 5-hour chart how I'll be looking for a pullback basically down to around here, which meant it was a little too it looked like it was going to make a test for this level, but I'd rather wait for a pullback, come down before getting in. So if that's the case, you got in. 27.22 was the level. And let's take a look at this now on the hourly chart at 10:42 a.m. Eastern Time today. Fibonacci is from this low and this high. So 27.24 actually was the level. Now if you were to buy there, you probably want to place your stop somewhere below this line. So therefore the stop would be, say, 26.90. We'll say 26.92. Go back to the 5-hour chart. That means you'd be buying here with the stop here, looking to go here. So if you look at risk reward on a situation like this is your risk, this is your reward. As long as you're right about 38-40% of the time, you'd be breaking even. Now, however, if we look at what's went on as of 11 o'clock Eastern Time, well, you got stopped out. Or if you haven't been stopped out yet, you're really close, because this area did not find support. This area right now is having a hard time finding support within the second Fibonacci level, which is telling us on the very short term that the rally that occurred yesterday might become that of a failed move. And of course, if this is the case, we've been in a very big bear market, that if we end up breaking below this level here, that's what I've been talking about for quite some time, with the possibility of moves to 20. 26 has been tested so often and more likely to be taken out, that a breakdown below this low, yeah, maybe we'll find a little bit of support at 26 and change, and maybe find resistance in this area, maybe resistance at 27. Even that may not occur, maybe it just continues going lower, but being in this bear market, it's very much not a surprise for there to be this move, but it can only happen for so long. And if that 20 move comes in, and I'm only going to be talking heavily at it if it happens, it would be an amazing buying opportunity, something silver hasn't had in quite some time. Thank you for tuning in, and have yourself a magnificent day. Bye-bye.